you're looking at sectors for 2025 here. Tell us which you think are best positioned, and then we'll get to the worst position in a hot second.
Okay, well, as we know, the our proprietary indicator, the HCM byline, is positive, so we see any pullback as being positive. But sectors, I think small caps are incredibly interesting right now because as interest rates are lowered and being dropped, that's going to dramatically impact the earnings on small caps and really be beneficial to them. I think that's a great place to play. Regional banks look good to us also. I think with lowering of rates, I think the regional banks are going to be a strong place to play. And again, consumer discretionary has always been quite successful in a market like this. But again, we're in a solid bull market, so there's a lot of places to play that are making a tremendous amount of money.
And what are the worst areas? What are the worst sectors that you think investors should be cautious around right now?
The main sector that I would be cautious, and mainly because it's in a downtrend right now, Brad, is healthcare. Like if you look at VHT on the Vanguard's healthcare ETF, it's in a downtrend, and it's in a pretty solid downtrend. Keeps making lower highs and lower lows all the way down. So I'd be very cautious on healthcare. I wouldn't make that trade trying to bottom fish there either, because there's too many great opportunities right now in this fantastic bull market to make money and to try to expand your portfolio in areas that are really working. We had the Magnificent Seven, but the market's clearly broadened out, which is incredibly bullish and incredibly positive.
That's so interesting because some of the data from Bloomberg Intelligence is still looking for even 20% earnings growth, profit growth rather, and for 2025 within healthcare. What do you think is, if we do see that level compared to the 18% that's expected for the Magnificent Seven and the 16% expected for materials, if we did see 20% profit growth in 2025, what would need to happen for healthcare to actually achieve that marker?
Well, that's an interesting thing when you look at it too, Brad. And one of the things we really analyze a lot is the technicals on a different trade, whether it's an ETF, whether it's a stock or a sector. And the technicals on healthcare just aren't there. It's in a downtrend, and I don't want to fight that trend. And as far as they're making money, it's a solid industry, but I wouldn't fight a downtrend in a great market when you've got all these wonderful stocks that are making new highs. You got wonderful ETFs making new highs. So I just wouldn't fight the trend. I think if you fight the trend's a great way to lose money.
And so as you're thinking about some of the trades that have been overcrowded over the course of this year, naturally the Mag 7 comes to mind. How do you anticipate that the trade will continue to hold up, especially given the thesis that's been layered on top of that, which has been essentially all things artificial intelligence?
Yeah, I think that's a great question. But one of my bigger picks is Salesforce. I really like Salesforce. I mean, it's breaking out. Its technicals look strong, but they're able to implement AI in such a way that I think it's going to be very impactful for the users, for the end user on Salesforce. So I'm really bullish on things like this. You look at NVIDIA, and they've got like the Blackwell accelerator that just came out, which is going to make their chip even faster. And as those chips start to expand into other industries like healthcare, it could be a great benefit to healthcare. It's mainly been in data mining and gaming as far as these chips are concerned, but they're really broadening out to where they're having a big impact in other sectors of the market. So there's a lot to be excited about as far as breakouts and stocks that are really working well.
It's interesting. You mentioned Salesforce. I wonder what your assessment is of the rest of kind of the ERP or even CRM landscape more broadly as they're trying to pitch out to their clients what their AI features, and we've heard agents tossed out there a lot at this juncture. What is the timeline for that to really play out, and the new baseline that you're anticipating might be set in as well as a result of netting out some of those net new customer contracts?
Well, I think when you look at Salesforce and you look at what they're doing with AI, I think they're on the cutting edge. They've got a tremendous amount of money behind them, so they can actually, do their R&D research in there and sort of start to game the market in a better and more productive place. And that's one of the reasons I'm so bullish on it. And one other reason, when you look at CRM packages like Salesforce, they have what we love, which is recurring revenue. When a subscriber signs up for Salesforce, they have to pay a monthly fee, which is, by the way, quite large because we use Salesforce. But I love recurring revenue. I think that's a great way to judge a company is, and you look at waste management companies, they have great recurring revenue too. But as far as CRM goes, I think the Salesforce is one of the more dynamic stocks out there that's actually implementing AI right now and going to make some great headway with it.
Interesting. Vance, thanks so much for taking the time here with us today. Really appreciate it.
Thank you, Brad.